All right, Bulls and Bears, it is Wednesday, April 9th, 2025. What a wild, wild day we had in the stock market. I mean, these jumps, we knew that there was going to be ups and downs. We knew there were going to be bounces, and the jury's still out on if this is going to be a dead cat bounce, if the market's still going to go down further. A lot of the drops were basically in line with the tariff and the tariff threats. And now we have a 90-day pause on most of the world's tariffs coming out of the U.S. and this administration. And that caused a massive, massive jump in the stock market today. One of the biggest jumps we've ever seen. Look at this here. We've got, bring it up here, Dow Jones Industrial Average today up almost 8%. And that doesn't look like that big of a bounce until you go out on like a 5-year chart. Let's just go out to a 1-year chart. I mean, look at this. Wow. This thing bottomed out here, 37,645. We jumped to over 40,000, folks. That's, I mean, just in one day, almost 8%. I told you I was buying a little bit of the dip here. Now I wish I would have bought more. S&P 500 similar, up even more, over 9.5%. Look at that bounce, folks. Craziness, right? We've got the NASDAQ. That was even bigger, 12% today. Look at this bounce on a 1-year chart. 12% in one day, folks. NASDAQ. Also, across the board, everything was up here. Russell 2000 up over 8.5% today as well, folks. So strap in because we said it was going to get wild, and we're not anywhere close to being finished yet. We got some other news to get into about the manufacturing situation. Will it come back to the U.S.? Well, let's go ahead and get into that next year. A lot of people are finally realizing that this is probably not going to happen. And even if they attempted it, it's probably going to be a pretty sad story. Look at this that came out of the Post here. Well, it was put out in a lot of places all over social media. This is a AI generation, and they had a little video of what it would look like possibly if manufacturing did come back to the U.S. And this is somebody that basically they're saying this is the average American right here, obese, working on a sewing machine here. So kind of making fun of the whole Americans trying to do this type of, like you see in these other countries, like they have a whole warehouse full of people sitting at sewing machines and putting things together, assembling things, right? These are common scenes in like Asian countries especially. And you have this American guy trying to do it. And of course, it does not look like he's going to be doing the job for very long, sitting there all scrunched up with a painful look on his face, right? Trying to sew some things here. All right, so if you were a major manufacturer, a large company, and you wanted to decide where you're going to set up shop at, one, you have the higher cost of living here. That's the first disincentive. But then you have the American population. We're one of the most heavily medicated countries in the world. Like half of the population literally is on some sort of medication. We have some of the biggest obesity problems here in the U.S. You look at some of these other countries, it looks like they've been eating rice, right? And not that I'm making fun of them because they don't have a lot of food. You know, some of these countries do that on purpose. They're very strict about their diet. Even if they're not poor or in poverty, some of the countries are very strict about what they eat. Bottom line is America's got some massive obesity problems. Let me just bring this up again, folks. I mean, this looks like the typical American. I mean, let me know what you think about that. All right, but back over to the markets and some other prices I want to cover here. Oil jumped back up. Remember, it hit the $58 range. Jumped back up with the markets to over $61, almost $62 today. Some of the other big gainers here that are notable, Nvidia up over 18%. We had Bitcoin jump over 8%, back up to 82,000. We have some other big ones here. One more I wanted to mention here. Folks, if you'd have bought the dip here, you're doing very well. I went in on an index with the big market drop a couple days ago, and I've already closed my position because I think we could possibly be going back down. Even though it's a pause on most of the country, I just don't feel easy having a lot of money into these markets right now. But today, Tesla up over 22%. Ford Motors up over 9%. The list goes on, folks. There was a lot of big gainers today. And you have to wonder why such a backpedal. If these tariffs were the solution to the problems and are going to bring manufacturing back, why are you worried about a market sell-off, right? There's also a big sell-off in the bond market as well. But I think they got cold feet. This administration saw the reaction, and they made that announcement very quickly after the market dropped. But also something else I want you to kind of think about and digest a little bit. If this is just a temporary, they're calling it a 90-day pause. They're saying this is a 90-day pause on tariffs. In other words, the same tariffs will be back in 90 days. If what they're saying is true, tariffs will be back in 90 days. So if you were an investor, knowing the tariffs are just going to come right back, why would you buy up these markets, right? To me, this market movement doesn't look organic at all. And some of you are laughing right now. You're saying, oh, of course it's not. Of course, this type of jump. If you were an actual investor and you knew there was a 90-day pause, would you go into the markets so heavy like you did today with all these big buyers out there? Right? Again, this is not the little middle-class trader, someone with an E-Trade account or someone in Robinhood. These are the big multi-billion dollar investment firms buying up these markets. You know, most of the stocks are owned by the top 10%. 50% are owned by the top 1%. About 90% are owned by the top 10%, right? So this is heavily, heavily consolidated as far as the ownership in the markets. That's who's moving the markets, folks. The average middle-class investor doesn't have time to sit at the keyboard. They're busy commuting to work and probably working 2 jobs, maybe 2 jobs and a side hustle, just trying to make ends meet. They're not sitting there in front of the keyboard for the most part. But folks, if you knew this was a temporary pause, if you were a real investor, why would you be so positive and go buy stocks? To me, this looks like big-time Plunge Protection Team action in the markets today. Let me know what you think about that down in the comments. And what's, I think, kind of interesting is there's people out there that still think that there's no Plunge Protection Team, that that's not legal, or that it's just a theory or something like that. Folks, it's even on Wikipedia. I mean, the real name they call it is the Working Group on Financial Markets. The Working Group on Financial Markets, known as the Plunge Protection Team, PPT, was created by executive order back in 1988. So, folks, the cat's been out of the bag on this for a long time. So if you're someone that's sitting there thinking that this is just made up stuff, I mean, come on. And look at the search trends here. This is Google search trends going back 1 year here, and we see that it just spiked over the past the past few days. And this is put out by Google. It's put out on weekly intervals. So this past week's been a major spike, the biggest spike we've seen in over a year in the people searching for the Plunge Protection Team, right? So people know, a lot of people know what's going on. Not most, I wouldn't say most people. I'd say a lot of people, but not most people. Maybe 5% of all the population probably knows how rigged or how manipulated this market really is. And when you see these point swings like you see today, I mean, you got to wonder, again, if it's just a temporary pause, why would you be coming in so heavy-handed, knowing these tariffs are going to come back? It doesn't make any sense. We know it's manipulated. We know it's rigged. And I wonder if this guy, our good buddy, I wonder if he knows how manipulated these markets are. He's probably thinking about getting a beer and going and watching the football game. That's what he's thinking about. He's thinking, when am I going to get out of here? Right? He's thinking, okay, they're asking me to work overtime. And he's thinking, I'm barely going to make it 8 hours. There's no way I'm going to work overtime today. Now, I also should add, this is not going to take away the tariffs from China. There's still these massive tariffs on China, over 100%. But this pause is for most of the rest of the world here. In an attempt to narrow what had been an unprecedented trade war between the U.S. and most of the world, a showdown between the U.S. and China, stock market jumped today, but the drama over the tariffs is far from over as the administration prepares to engage in country-by-country negotiations. In the meantime, countries subject to the pause will now be tariffed 10%. So it's not a complete pause, but it's dropping it down to 10%, which is a lot lower than a lot of these countries were expecting initially. So crazy volatility, folks. Again, a time to be very cautious. And if you're into dip buying, I mean, this is a good opportunity overall, I think. But it doesn't mean I would be buying the dip and holding, because I think there's going to be a lot more volatility down the road, even way more insane than what we're seeing right now. I think 2025 is going to be one of the craziest years of all time. Worse than 2020, worse than the financial crisis. And I'm not saying it's going to crash. It could be inflationary, right? It could be worse, but on the other end, it could be on the up end instead of the down end. Instead of a drop or a crash, we're going to see massive inflation, which is worse than, in my opinion, it's worse than a deflationary crash or a Black Monday sort of event where the markets just crash and don't recover. Oh, and by the way, the biggest, today's gain in the Dow Jones was the biggest since 2008. So the point of that is, why I'm mentioning that is because it's very volatile when you see market peaks. And before big economic downturns, you see a lot of volatility. It's not all drop, 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 drop. It's drop, big gains, record-breaking gains in some cases. Or today, a gain, the biggest gain in almost 20 years, the biggest one-day gain. So this is a sign, folks, that things are getting very, very sketchy behind the scenes, to say the least. All right, some other things real quick here to get into, and then I've got some other real estate housing market news to hit today. Applebee's, two Applebee's locations closed down after being evicted for thousands in unpaid rent. Two Applebee's locations, both in Wisconsin, closed after being evicted. Court records obtained show that the businesses owed over $150,000 in overdue rent payments at the time the evictions were filed. Wow, so they let them get away a long time without paying the rent if they racked up $150,000. All right, people, something else notable in the news here. Walmart came out and said tariffs are going to hit profits. In other words, they're not going to go ahead and raise prices in conjunction with the amount of tariffs that they're going to be paying, or to compensate for the cost increase of the tariffs. They're saying they're not going to raise prices. They're going to still keep prices as low as possible and possibly take a hit to their profits, right? So very interesting what they're saying about the tariffs here. Now, to me, the scary part of this is technically Walmart, I think, could raise their prices and people would still shop there because it's really hard to find all the things you find at Walmart. It's hard to find them at a small business, right? Maybe in some cities there's a lot of small businesses where you can get a lot of the things that you can get at Walmart, but in most areas you're not going to find what you can get at Walmart at a bunch of small businesses, right? And I was looking at this page here. It's very interesting. I was just shopping for a shed on my phone. I was looking for one, like a small shed for the backyard, and apparently they're tracking me because now I logged into the computer. Obviously I'm doing the screen sharing on the computer, and they've got all these sheds coming at me. Now they're showing me tools. I wasn't shopping for tools, but anyways, they're tracking you, folks. They're watching what you're searching for. They're watching on your phone and everything. All right, people, a couple other things to hit on before we get out of here. More news is being put out now about how Americans are preparing for a financial apocalypse, a financial crisis, a world-changing financial crash. And more articles like this. Americans are preparing for when all hell breaks loose, talking about the fringe people that are preparing for something massive. There's even some of those people right here on YouTube that are actually living out in the wilderness and trying to farm all their own food and stuff like that. Nothing wrong with that. I think that's very admirable for someone to do that, trying to be self-sufficient, trying to basically live off their own production instead of having to rely on the grocery store and everything else. The thing with that is you still have to have some sort of dollars coming in. Otherwise, you can't pay your monthly bills. You can't pay your utilities. You can't raise hens and gather eggs to pay your light bill. You know what I'm saying? So it's very interesting how some people, make that move out to the wilderness or out in the woods, what have you, and try to be 100% self-sufficient. But you can never really be 100% self-sufficient. The Amish, I think, are the closest to being self-sufficient, but I'd have to look into that more and dig more into that and see how they pay their taxes if they're just living off their farm or whatever. Are they tax exempt? I don't know. I'll have to look it up. Topic for another time, another video here. But let's move on to a couple other stories here. We've got the Treasury Secretary out there denying that this pause in tariffs, or the reduction in tariffs, this temporary reduction in tariffs, denying that this tariff change of heart or drawback, denying that this is because of the market sell-off, right? So I don't know about that. I don't believe that at all. I think it's all about the reaction to what's happening in the markets. I mean, let me know what you think about that down in comments. And pretty interesting comments from the Delta Airlines CEO. Americans are behaving as if they're going into a recession, folks, but this has been happening for a while. People's credit cards are up there, and even if these credit card companies continue to raise the debt ceiling or the limit on their credit cards, not the debt ceiling, but the limit, you know what I'm saying? Even if they raise it, people are still, I think, are concerned about the balances, right? Even though they have more credit to run up, they're concerned about the balances and their ability to pay them off. Right now, you can still get balance transfers. So a lot of people are living off of balance transfers and the ability to avoid the 20-something% interest on a credit card by transferring their balance to an introductory, sometimes 10 or 12 month at a 0% or something like that. That's how a lot of people are skating by right now, folks. So as long as the balance transfers are available, you're not going to see any sort of collapse. Once the ceilings or the limits on these credit cards stop going up, once banks start to tighten and credit card companies start to tighten, and once these balance transfers are not going to be available, if they stop those, that's when you really start to see the implosion accelerate very, very quickly to the downside, because the levels of debt right now, folks, people are finding these different ways of skating by. People are wondering, why we haven't seen a collapse when the debt levels are so much higher now than they were in 2008, folks. There's a lot of other things happening, especially in the banking system and the way money's loaned out, a lot looser now than what it was back then. A lot more federally backed loans to buy homes, right? Way above where we saw in 2008. But we'll get into that more next time, folks. I got to wrap this one up here. Let me know what you think about all this. The factory worker that we saw at the beginning, the typical factory worker. Will American factory workers be very productive compared to these other countries where they're like little machines, like making all this stuff, like sewing and everything else? What do you think about this, folks? The tariff pause, right? If it's just a temporary pause, why are big investors so confident once again in coming in and pushing these markets up? We know it's the PPT. That's my opinion. Let me know your opinion, please, and we'll talk to you soon. Keep stacking by for now. Peace.